All right. Well, with no further ado, I'd like to present our guest speaker today, who is Cardeen. She's not only our guest speaker, but she's also the city leader for Brampton, and she puts a bang up um, Wednesday mornings and in the coffee mornings, because her high top table there is always full. So Cardeen, if you take it over, and the floor is yours.
Good, sounds good. Let me know when you are able to see my screen.
Yep.
All right. So I'm excited to share with you this morning how to build an opportunity fund and how to do this without using the banks. And you know what? I love to have interactive conversations. So if I ask you to do something, please do it. Just participate so we can have a great conversation. So, have you ever missed an opportunity? Something that you wanted to do, but you just couldn't do it. What was the reason? Type a yes or no in the chat if you've ever missed an opportunity. And also let me know what was the reason you couldn't pursue that opportunity. More often than not, the number one reason that individuals can't pursue opportunity is because of a lack of funding, access to liquidity. And as entrepreneurs, it's critical to our success to be able to respond quickly to opportunities. Whether it be a new investment, a new collaboration, a new product launch, an acquisition, or even a hire, being able to be responsive could be the difference between success and failure, right? When was the last time that you probably went to the bank to ask for credit? What were some of the things that they asked for?
I'll never go to a traditional bank and ask, because they want me to take in all my debt, personal debt, and but they'll only, because I'm the only person on my business, take that as an income. And I go, that's not fair.
Yeah, right? They ask for a lot. 3 years of T2s, credit checks, bank statement, guarantors, your unborn child. They ask for a lot, right? And it could take months. And at the end of the day, you might not even get approved. But what if you could create your own money vault? Build something over time that you can easily access to help you go after these opportunities. And as you said before, Catherine, the entrepreneurial reality, it's a bit different. We have our challenges, right? As business owners, our income is sometimes unpredictable. One month might be record-breaking, the other month is quiet. And banks sometimes they don't understand that rhythm, right? They see the inconsistent cash flow as a risk. So what if you could instead create stability and flexibility on a personal as well as on a business level? You can build capital that's always accessible, and you don't have to rely on the traditional lenders that more often than not, when you're in need, they will tell you no. Is anybody interested to hear what this potentially is? So an opportunity fund is simply a pool of money that gives you freedom, right? Freedom to jump on an investment, build a bridge during slow season, fund expansion, support your family through a transition. It's cash you have control over, not the banks, and in some cases, not the markets. And the smartest way, I feel, you can disagree or agree with me. I'd love for you to agree with me that it's using tools, financial vehicles that allows your money to grow tax efficiently and lets you have access to the funds on your terms. And you might be thinking, you know what, my savings account does just that, but does it really? When you access funds from your savings account, you typically have to bring it to zero. Then you have to rebuild again. Another opportunity brings it to zero, and then you have to rebuild again. anything that you were earning inside of your savings account, that cycle gets interrupted. What if you didn't have to do that? Give up something in order to chase the opportunity. I know. What is this money vault? Can you believe it's a cash value life insurance policy? Who ever heard of using their cash value life insurance policy as a money vault?
Yep.
Yep. I know Michael knows it. Right? So it is your cash value life insurance policy. And most people think of a life insurance policy as just protecting their family, a death benefit payout. And that's a big part of it for sure. But for example, a permanent life insurance policy, whether it be a whole life policy or a universal life policy, it has this additional layer. It builds cash value. And just so you know, just in case you didn't know before, the life insurance industry is one of the biggest tax shelters there is. Your cash value grows, tax exempt, and you have access to it while you're alive. In other words, you are building your own private reserve, right? Your opportunity fund. I'm hoping you're as excited about it as I am. So how does this work in real life? Well, say for example, you've built up inside of your policy 100K over a number of years or a few years, right? You could do that as a lump sum, depending on your resources, or you build it up over a number of years. And say you needed, for example, new equipment, whether it be photography equipment, brick and mortar expansion, or new tools for your business. You needed 30K. You could easily, I guess, try to get that money at the bank or maybe get financing from the vendor. But as an alternative, you could leverage your cash value for quick, cheap loans that allows you to get these resources into your business. It doesn't require credit checks, doesn't take a lengthy approval process, no income verification. It doesn't even show on your credit score, right? On your credit report. So imagine what this could do for you and your business. It's like you're borrowing from yourself because it's cash secured. And one of the most important things I like about using my cash value instead of my insurance for policy loans is that I get to determine when I pay it back, right? So there's no structured repayment. You can decide, can I pay it every month? Can I pay it after my project is done? Do I just pay interest this year? You have control over that. And while you've accessed that cash, guess what? Your money, that vault is still working for you because you really didn't touch it. You just leveraged it. So you're still benefiting from the power of compounding inside of your insurance policy. And the biggest advantage, as I said, the life insurance industry is one of the biggest tax shelters. The biggest bill that you have is your tax bill. So what if you could kind of put a cap on that a bit? When you access money through using a policy loan, the loan isn't considered income. It's not taxable. So you could do this over and over again inside of your business, inside of your life as needed. Rinse and repeat. Borrow, invest, expand, grow, pay it back. Borrow, invest, expand, grow, pay it back. And if something should happen to you, should you pass away before repaying the loan, guess what? The insurance policy takes care of that for you. So you get liquidity, you get tax efficiency, you get legacy creation, all in one structure. That's your dollar doing multiple jobs. And you know what? It's not just about business because we all have an end game, right? We don't necessarily want to do this forever at full steam, right? We want to be able to enjoy a certain amount of quality of life, especially at retirement. So the Opportunity Fund is not just for business solutions or business endeavors. It's also an opportunity fund for your quality of life, the life that you want, the life that you deserve at retirement, a life that incorporates flexibility and access to opportunities and options. So when you're ready to slow down, you can actually leverage the cash value inside of your policy again for supplemental income. And this income won't impact your government benefits. And depending on how you access it, it doesn't trigger taxes as well. And one of the worries when we're looking towards retirement is, are we going to outlive our money? We can structure access to the cash that ensures that you don't outlive your money. So, as I said before, having options built into your financial structure that supports you, your business, and your family is of utmost importance. It's strategic to have more than one income stream, and it's important to have control, especially when it comes to how much taxes you pay. So this is just a fictitious example, right? So this is Maria. She's a business owner, 45 years old. So she's a healthy female. So she qualifies for a life insurance policy, and she chooses to overfund the policy. And that's the important bit, overfunding the policy to build that cash value. So she does this over 15 years. And while she's building this cash value, she's leveraged it multiple times in her business for expansion, for property investments. And she knows too that when she gets to retirement, it will also provide that supplemental income, that access to cash. So she has the opportunity in her business now to chase anything that comes along her way that she sees can add to her business and her growth. And she knows that she's building a quality of life for herself at retirement as well. And she hasn't interrupted her investment cycle, her growth cycle with her funds. You know, that was a fictitious situation, but I'm going to show you some real life examples of how individuals are using this strategy to grow their wealth tax exempt and also to create a reservoir of money vault that they can access. Because guess what? It's actually built inside of your insurance contract that you can do that. So, a quick question. If anybody's okay to share, what is your rate of return inside of your business? What is the rate of return that you're hoping for inside of your business? You can take off.
Like an adult, or
yeah, is it 10% return, 15% return? And this is.
Are you talking like year over year, because I mean, it's just, you know, blood, sweat, and tears put into it. What are you getting out of it? I look at between a 7% to a 12% year over year, yield.
7%
7 to 12%, yeah.
Okay, 7 to 12%. And that's great, right? You're above inflation rate, and that's good. But guess what? What I'm going to show you is some examples of individuals who passively, without that blood, sweat, and tears that Ivan just mentioned, is earning more than 7 and 12%, right? So these individuals actually have a universal life insurance policy. And of course, their names are grayed out. I have their permission to share, so I'm not violating any privacy rules here. But just to show you, right? Over time, they've chosen to invest inside of their policy. And the difference is that you have the seed money. It doesn't have to be a huge seed, but you can start planting the seed to build this fund. And you can experience, using this type of a policy, market type returns, right? So do you net $37,000 per year in your business, $26,000 per quarter in your business? This is an opportunity. So building that fund, that how much over 100K in that example, it doesn't all have to be your investment. It's the growth inside of your investment that you didn't have to carve out taxes out of, right? And again, this person, 2K per months, and they've done this almost 20 years. They've built up this reservoir of capital of over $1 million, right? And they're earning passively almost 50K, and this is in a quarter. So this is just the potential. This is not guaranteed, right? Because this is market driven. And for those that are not as aggressive with investing, there are other policy options. For example, a whole life policy option that provides that slow, steady growth, right? So this is just showing you how you can build that reservoir of capital inside of your life insurance policy. Have that grow for you passively. Have that asset that you can leverage, just like real estate, where we use HELOCs or whatever to access the cash. We can use policy loans, etc., to access that wealth that we've stored inside of our policy to pursue other investments, right? You can invest in assets that, again, generate income for you, even while your policy continues to grow on your behalf. So you are able to access funds without liquidating your investments. You have control, you have privacy over your capital. You could choose slow and steady to win the race, or you could use market-driven returns to compound your return in your side of your policy. And again, the insurance industry is the biggest tax shelter there is. Your cash value grows tax exempt, and depending on how you access it, determines if you trigger taxes in the future. And the biggest benefit, in my mind, especially if you have individuals who depend on you, it protects your family. If life throws you a curveball, it instantly adds to your estate value as well. So as entrepreneurs, of course, we know the importance of flexibility. We value freedom, right? And this tool, structured properly, can provide you just that. The ability to create opportunities of your own or chase ones that come up in view as you build and grow your business, as you build and grow your family. Liquidity, tax efficiency, and control. This is the goal of our business. Provide for us a strong financial foundation, peace of mind for our family, flexibility, and lasting wealth. So what I just shared with you is just the tip of the iceberg. That's as much information I can cram in 15 minutes, right? If you want, so if you want to learn more, feel free to reach out to myself. I'll be happy to share how you can structure a plan that allows you to do just this. Build wealth, have access to cash, and provide protection for your family, provide a tax shelter for your income. And I know as entrepreneurs, sometimes we have money stuck inside of our business and we just don't know how to get it out. We think about salaries, dividends, but guess what? Using your corporately owned insurance policy is also a way to get funds out of your business and have that funds invested and growing tax efficiently for you. So again, so many options. Let's have a chat to explore if you want to learn more.
Thank you very much.
Amazing. Good.
Yeah,
Nice.
I do.